everyone thinks they know the reason for this Bitcoin dump. So everyone's looking at Bitcoin and saying, oh, Bitcoin dumped to 36,650, and that's because of the Facebook and Meta earnings. It's not. And I'm going to show you today what the real reason for this Bitcoin dump is, and it's not what you think. That I promise you.
Get the fuck out of bed, bitch, go. Get up, and get the guy, go. Time to wake up, bitch, get up. Get up, get up.
Yo, Banter fam, welcome back to another brutal day on the markets, another one of those days. And everyone thinks they know exactly why markets were dumping, and everyone's blaming Facebook, but it's actually not Facebook, and I'll show you in a second why it's not Facebook. I'll show that. I'll show you guys that. Also, we're going to talk about the Solana hack and what it actually means, because there are huge implications of the Solana hack that I don't think anybody's actually talking about. So we'll talk about the Solana hack today. We're going to talk about Facebook's earnings. We're going to talk about the reason for the Bitcoin dump, and then I've got one or two other things that I want to talk to you about, one or two other tricks up my sleeve, if you want to call it that. So if you're new to our channel, welcome. Welcome to the Banter fam, the best crypto community in the world, that I can tell you that's for sure. Certainly the most loyal crypto community in the world. Yesterday we had a call-in. I love the call-in. I think, in fact, we'll do it tomorrow again instead of Banter. So instead of Banter tomorrow, what we'll do is we'll do another one of those call-in shows, but we'll make it very targeted around things that are happening on the market. Anyway, guys, let's not waste any more time. If you are new to the channel, subscribe. Like this content, because the YouTube algorithm is starting to ban crypto content again. It kills us, but it is what it is. So let's do it. Let's like this content. Let's tell the YouTube algorithm that actually this content's not that bad. I mean, it's bad, but it's not that bad. It's bad, but it's not that bad. All right, let's talk about the big story of the day, and that is why Bitcoin dumped. Everybody's saying that Bitcoin dumped because of Facebook and Meta's results, right? So that's basically what happened. And that is after Gareth Soloway. You remember Gareth Soloway said, okay, Bitcoin's having trouble breaking 39,000. He said it's epic resistance. However, if Bitcoin can break above this, we're going to go to 44 to 46,000. That's what he said. And then he posted yesterday, said it's dead in terms of the mega level Bitcoin was dealing with, so far unable to get through. Why? What actually happened out there? Everybody's blaming Facebook because of their terrible results. And you can see that in the pre-market, Facebook is down 23.22%, right? You see 23.22%. Yesterday, it was at $323 a share. Now it's at $248 a share. We're going to talk about that. But let's look at the reason for the dump. If you look at what time Bitcoin dumped yesterday, this will give you some clues, right? So if you take the 1 hour chart, which is what I'm going to do over here, I'm going to get the 1 hour charts. Let's look at what time did Bitcoin actually start dumping yesterday. So look at that. On our time, it started dumping at about 1 o'clock. So that, as you can see, that little line over there showing you that Bitcoin started to dump at around 1 o'clock. Now let's go look at when the Nasdaq started dumping, or the Nasdaq future started dumping. It was 9 o'clock at night. So the dump in Bitcoin had nothing to do with Facebook. Even though Bitcoin has been tracking the Nasdaq, and the Nasdaq is now down in terms of its futures, is now down 158 points. I did say to you guys that I thought this may happen. I told you that I thought this may happen. Why? Because I said to you guys that if you look at this trend line, if you look at the trend line that the Nasdaq has been following, it looks like it broke down through the trend line, and then it went back for the retest. And then I said on Sheldon's show yesterday, it looks to me like it's going to touch that line, and it's going to go straight back down, and it's going to continue the down. But I'm not a chartist. I'll tell you who is. Gareth Soloway is a chartist. Gareth, what do you think of my assessment? I've become a bit of a chartist here. You see, I've learned how to draw trend lines, and I'm doing retests, and it's going down now. What do you think?
I think you're doing awesome. I think that's exactly right. You're talking about a major trend line retrace, and then on the charts, just like we mentioned, and you showed my tweet, You had the Bitcoin chart moving up into that downsloping trend line. It was also the 20 moving average as well. So it just made sense that Bitcoin was going to pull back just a little bit. And one thing I'd love to do is just show my screen here and just go over a couple things. And basically what we're seeing is Bitcoin showcasing itself at resistance, right? So you have a very clear downsloping trend line, like you posted up and you said it started before Facebook earnings. Facebook earnings are adding a little bit to that, but I'll be honest, this is a big test because the Nasdaq's going to get crushed today. And if Bitcoin can actually hold up relatively well, like let's say it stays around here, that would be a short-term bullish sign. Now, one last thing I want to just mention here is that the general probabilities, and I deal with probabilities, which is what charts are, the general probabilities dictate that this pattern goes like this, and then it goes like this, right? So I actually expect a little bit more downside, very minor, but then I think you break above this trend line and you have upside to about 46,000. So I'm still anticipating a breakout, a short-term breakout, I should say. But again, it just has to kind of do what the patterns do. Price pattern and time charts behave a certain way. It's based on the psychology of the human mind, and they have to do what they have to do. But look for a potential breakout in the near term.
I think I agree with you, because if I look at the reason for this dump, it's actually it's a fundamental reason. I mean, the technicals are showing it, but the technicals are showing it because there's something fundamental going on. We're going to talk about what that fundamental is that is driving that market. But before that, I want to talk to you about this chart over here. What do you see as the future of this Nasdaq, in the short-term future of this Nasdaq chart? My assessment is, and I'm not as good a chartist as you are, I did do Sheldon's masterclass, so I think I'm starting to find my way around. But so we've had this trend, and this trend's been going on pretty much since 2020. We broke down to a trend. Now we're having a retest. And then if theory is right, then you pretty much have this going to happen next, right?
Yes, correct. That's called a retrace to the scene of the crime being the break of that trend line. And then absolutely, it's going to continue to trend down. Now, it's not going to go in a straight line, right? We've just seen a big bounce. I think there's going to be opportunities out there. I still expect Bitcoin to have bounces before it continues lower. But yeah, you're absolutely right. And you're doing a great job on charting, Ran. I think that's fantastic.
Is there any chance that Bitcoin decouples from the Nasdaq? Is there any chance that Bitcoin can go up while the Nasdaq goes down?
I do think so. And those are the things I'm watching like today. Today would be a big test case for it. Now, I don't think it overall is going to decouple 100%, but you look for small signals in the near term. Like right now, I think you have the Nasdaq down about 3% going into the open. And if Bitcoin can just hold in this range, that's a very, very good sign. It shows that money may be rotating out of even big cap tech and maybe looking for a safe haven. And a lot of investors are going to say, hey, listen, Bitcoin's down 50% or almost 50%. This might be a place to hide if the Nasdaq's going to continue to collapse. So I actually think in the near term, that is a possibility.
What about the Dow? What about the flight into industrials from tech stocks? Are you watching the Dow versus the Nasdaq?
A little bit. So the Dow is just 30 stocks. It's generally dividend paying stocks. So I think we have to kind of keep that in mind. But overall, the tech stocks are where the risk is, right? I mean, that's the high growth, the potential for those high PE ratios in the fundamental side, where there's been a lot of expansion in PE. So when the market starts to collapse, those stocks are the ones that get hit the fastest. The Dow generally will hold up better because it's good quality names that always produce earnings versus the tech stocks.
All right, your bet. Are we going to break up into that 42, 43,000 region? Are we finally going to make that test and actually get through it?
I think you are. I think you're looking at a potential for the sentiment to shift in the near term to being more of a safety trade. Bitcoin's down 50% already. A lot of the downsides there, and then you see money coming out of names like Facebook and other tech names. We have Amazon earnings after the bell today, so that's going to be a big one as well. And again, I think you see money rotating into that.
Yeah, I think Suzu said it. I'm trying to find the Suzu tweet, but he's saying that there's a K type of economy. Here we go. He's saying we're getting a K type world where you're getting Netflix down 22%, you're getting PayPal down 20%, you're getting Facebook down 22%, you're getting Spotify down 23%. And then you're getting Google up 11% and you're getting Apple up 11%. And so it's almost breaking down the big stocks into like two camps. Mm-hmm. One camp shooting completely up and one camp shooting completely down. And it's like he's calling this a K-type world.
Yeah. I think that's very accurate. Now listen, I actually have to run. I got my traders waiting for me, but thank you for having me on, Ran, and it's always a pleasure. And I hope to be back maybe tomorrow or in a week or two.
Amazing. Well, listen, Gareth, thank you very much, buddy. All right, so that's Gareth. And by the way, Gareth's chart of the day is going to be here just as soon as Fred puts it up here. I mean, what's going on with Fred? Just a second. Just hold on a second. I need to see why that chart is not up yet. Hold on a second. Just hold on a second.
Bro.
Fred. It's not up. It's not up. He says it's up. Maybe I must click refresh. I don't know. I mean, I don't know what's going on. I actually don't know what's going on here. He says it's up.
Okay,
I don't know. Fred says it's up.
Let me talk you through it. Okay, so let's share your screen.
Share your screen.
Okay, so you're going to hit that circle just next to the URL.
That one.
That's the one, yeah. Click.
I just did.
Okay, now go into breaking news.
Okay, I'm on breaking news. Fred, now the website's done. You guys are degens. These guys are degens.
Okay,
These guys are degens. All right, you bunch of degens. You keep crashing our site. Keep crashing our site. I'll just keep blaming Fred in the meantime. Gareth's chart
signals
is
and trades. Try signals.
Is it under signals and trades? Okay, let's try and see it under signals and trades. Aha. He's right. It is there. Someone teach Ran how to clear cash. Yes, please someone teach me how to clear cash. All right, so Gareth's chart is up here. It does talk about the Bitcoin move. By the way, go to the site, sign in with Twitter. Whoever you are on Twitter, you are on our site. And you can see Gareth's chart. You can also see the morning brew. I love the morning brew. I'll show you in a second why I love the morning brew. So that's Gareth's chart over here. You can see it all over here. It's on the website. Also, I love this because I don't know if you guys noticed, but the designers, they put a sandbox logo on Mark Zuckerberg's cup. I don't know. These guys have got a sense of humor. These guys have got a serious sense of humor after Facebook's results. Everyone thinks that those Facebook results are what crashed the Bitcoin market. And the Facebook results were like really bad. They were like terrible. The Facebook results, we'll go through the Facebook results, but that's not what actually took the Bitcoin price down. And I showed you why I'm saying that it wasn't what took Bitcoin's price down. Because if you look at when Bitcoin's price started to come down, Bitcoin's price started to come down at about 12 o'clock, 1 o'clock our time. I'll show that to you over here. So you can see that Bitcoin's price started to come down at 12 o'clock or 1 o'clock our time. And if you look at when the Nasdaq started crashing, that was only when the Facebook results came out 8 or 9 hours later. So that wasn't what caused the market to come down. So if it wasn't that caused the market to come down, then what is it that caused the market to come down so quickly? It happened yesterday, kind of like while we were on the show. When I started the show, the Bitcoin price was around 38,000, and then it started to come down. But what was it that actually caused the market to come down? What if I told you that what caused the market to come down yesterday, or Bitcoin to come down yesterday, was actually something that happened 5 years ago? Yeah, what if I told you 5.5 years ago something happened, and because of what happened 5.5 years ago, that is what caused the market to come down. And it wasn't BitBoy's intelligence, and it wasn't the wormhole hack. So what was it? What was it that caused the Bitcoin price to come down before the Nasdaq came down? I'll tell you what it was. Remember when we were on Sheldon's show the other day, I said to you guys that we need to watch out for this. There was one thing that was negative, and I said to you guys, watch out for this. And that is because 10,000 of the Bitcoin that were stolen in the Bitfinex hack in 2016 started to move. In fact, $2.5 billion worth of Bitcoin started to move around. Whales started to move these Bitcoin around yesterday or the day before yesterday. Now, Il Capo of Noia, Crypto Capo, he actually pointed out that the last time that this actually happened was in April or May. And that was just before the big dump. So just before the big dump, we had the whales who were moving around, or these hackers that were moving around the funds that they stole from Bitfinex. And that is what crashed the market. And it seems like they may have done it again. So 2 days ago, or when this happened, on the 1st of Feb, I showed you guys that these hackers actually started to move their money around. And when they move their money around, the problem is that these tokens have been, when they move around, they start to affect the on-chain metrics, and they start to affect and to start triggering sell orders. Now I want to show you how the theft, these coins that started to move, actually started to affect the on-chain metrics, which is quite big. So what happened first is you saw 10,000 Bitcoin, which is $385 million worth of Bitcoin, moved. And there were actually 2 transactions of $385 million worth of Bitcoin moved. The problem with that is that what it does is it starts to move the coins destroyed days. That means that coins destroyed days, when you move coins that haven't moved since 2016, it is as if whales who have been holding coins for a long period of time have actually been moving the coins. So you got that. So basically, it first feels like those coins belong to hodlers. And then because the hacker he has been a hodler since 2016, starts to move the coins, it starts to affect all the on-chain metrics. So it affects the SOPR, it affects the coins days destroyed, the net hodler position. So you can see that because of that one big transaction, the net hodler position actually went negative. Okay, which is the net hodler position looks at how long people have been holding their coins, and it actually went negative because these things moved. Now, the SOPR ratio, the short-term holder SOPR, also went wildly negative. And remember that when these on-chain metrics start to change, then that can start triggering other metrics and start looking at sell orders. So when the coin started to move and the coin started to start hitting exchanges and whatever else, it did affect all the on-chain metrics. And when the on-chain metrics are affected, well, that can start triggering sell orders, changes in fundamentals. Because again, if you're changing on-chain metrics, you're actually changing the fundamentals. You're taking 20,000 Bitcoin that were traditionally assumed to be held by whales. Well, actually, now they're not really held by whales. They've been held by hackers. And the hackers probably have or are starting to sell those tokens. But how would you start selling those tokens? Because remember that those Bitcoin have kind of been marked as negative or as bad Bitcoin or as tainted Bitcoin, so to speak. There are ways that you can actually do it. So Freddie Reynolds says 2 billion of the 2016 Bitfinex hack was moved this hour. Made me think about what paths currently exist to move Bitcoin onto ETH without any KYC. So understand what's happening here. The Bitcoin are moving. The hacker can't cash out the Bitcoin at any exchange, because at that point he would need to have some kind of KYC, right? You have to get KYC'd, and then would have a clear line of where those coins have moved to. So what the hacker has done he has followed a whole lot of paths to get the coins wrapped as ETH and get them without any KYC. So you can go to, for example, Thorchain. You can go to Ren Protocol. You can create wrapped BTC, etc., etc. So this is the path that the hacker's been following, and what we can expect is that in the next couple of days, what you'll get these Bitcoin actually being sold out into the market. So the first step was it affected the on-chain metrics. When you affect the on-chain metrics, you effectively start triggering sell orders in the market, because people start saying, hold on a second, the on-chain metrics have now changed. Whales are no longer holding. The net realized value has actually gone negative, etc., etc. And then that triggers through a whole lot of sell orders. And he says, one of the guys here says, how would you do it? Well, they can send it through Thorchain with a few point slippage, which they can do, and wait for ARBs to keep rebalancing back to the market. It'll take time, but now you can tornado cash and withdraw over time. So basically convert it into Bitcoin on ETH, and then just start selling the Bitcoin on ETH. And that's exactly what happened. So don't blame Facebook. It actually wasn't Facebook's fault that the market collapsed yesterday. It actually was the Bitfinex hacker's fault, or the Bitfinex hack's fault. And that's what's going on. You know, it does seem like 2016, 17, 18 was the age of exchange hacks. And 2021, 22 is the age of smart contract hacks. Doesn't mean that you mustn't keep your crypto safe. And I'll talk to you about that at the end. Anyway, let's talk about the other story, or why people said that the Bitcoin price went down, which is garbage. That is because of Facebook and the appalling results that Facebook, Meta, that Facebook Meta published yesterday. The results weren't that bad. They weren't that bad, but the Facebook share price has been obliterated. Okay, there we go. The market is now open, and the Facebook share price is 27% down. You understand? 27% wiped off Facebook's market cap. Wiped off Facebook's market cap. So let's quickly look at that. I actually tweeted earlier when I saw the pre-market, I said, did 0x Sifu actually go work at Meta? Because that's the only way that I could explain such a sharp drop in Facebook's price. Facebook wiped off 550 days of growth in 27 minutes after publishing their results. And their results actually weren't that bad. I've got to be honest. So they came in below expectations for the fourth quarter, but let's just look at what below expectations actually means. Revenue in the first quarter will be between 27 and 29 billion, while analysts were looking for 30 billion. I mean, that's like missing it by a little bit. Headline earnings per share were 367. The market expected 384. Not such a big miss. Revenue was 33.67 versus 33.4 billion. So here is where it gets interesting. Now, just get a grip on the numbers here. Understand, the reason why I want you guys to see these numbers is I want you to understand crypto adoption versus Facebook adoption. And it shows you how much of a way we still have to go here as crypto. Daily active users, 1.93 billion daily active users versus 1.95 billion that Wall Street expected. You understand that means that 25% of the world's population is using Facebook every single day. And 2.91 billion versus the expectation of 2.95 billion people are using Facebook every single month. That is like almost like 1/3 of the world's population is using Facebook every single month. Why am I talking to you about this? Because that just shows you how much more growth we have in the metaverse. What crypto app even has 500 million people or 100 million people as daily active users? And Facebook, which is a company in our time, in our generation, is having 2.91 billion people use their platform every single month. That just shows you how much more scope there is for these crypto projects. That just shows you how much more scope there is. Anyway, after the release of the results, there was a call. And on the call, they spoke about what it was that dragged the Facebook results down. And it seems like the Facebook results were actually dragged down by a couple of things. The first reason why the Facebook results were dragged down, well, is because nobody uses Facebook anymore. When I say Facebook, actual Facebook. No one's used Facebook for the last 5 years. No one that I know. Do you use Facebook? I don't use Facebook. No one uses Facebook. Facebook, for me, is like a place where people post obituaries. It's like when they lose a friend or lose an uncle, then they post there, I'm so sorry. That's the only time that I know anybody ever uses Facebook. People have moved on to other things. And one of the things that Facebook spoke about was TikTok and how TikTok is actually eating their lunch. So that's one of the reasons why why the analysts brutally sold off Facebook. The other reason why for the brutal sell-off was because of iOS, or because of the changes to the rules of the Apple App Store and iOS, where Facebook cannot get as much data as they used to get, and so the advertising is taking a big hit because the advertising is no longer as targeted as it used to be. That's the other reason. The next reason why they missed their targets, or why the sell-off happened so badly, is because of this. Is because they spent $10 billion in the metaverse, or on the metaverse, in 2021. So they only made $10 billion and they spent $10 billion on their metaverse efforts in 2021. And the year before that, I think they spent also about $8 to $10 billion. So all in all, Facebook has already spent about $18 billion on their metaverse efforts. What do they have to show for the $18 billion that they spent on the metaverse versus what Sandbox and what Sandbox and Mana, Decentraland, and all the other metaverse projects have to show without raising $18 billion or without spending $18 billion. And I'm not the only one who thinks this. I caught this interview on Bloomberg, which I think you guys should take a listen to. Let me quickly play it for you guys.
You're also not bullish on the way that Meta platforms, aka Facebook, is going to succeed with its shift to the metaverse?
Yeah, we're not bullish on it at all, actually. Not bullish. The digital future is with Facebook, with Meta. We believe that the sort of the versioning Web 3.0 ecosystem, while it may include Meta, for some things, it will not be core to what the metaverse ends up looking like in the future. We also look at it. We took a short position in Meta because we do believe that as there are more information comes out over the next couple of years, we do believe that the potential to be highly regulated and/or broken up is a real possibility. And so we've taken a small short position, which we will hold now and into the future.
So what they're saying is that they're not bullish on the way that Facebook is going to execute on their metaverse type transactions. Suzu said it quite well. He says what we're kind of seeing is we're seeing a K-shaped world. We're seeing a world where certain of the big tech stocks are going up and certain of the big tech stocks are going down. And I looked at the tech stocks that are going up and I looked at the tech stocks that are going down. And I think I found a pattern of what all of these tech stocks have in common. So if you look at the ones that have suffered, PayPal, Spotify, Facebook, Netflix, those are the ones that are going down. And then you look at the ones that are going up, it's Google and it's Apple. Now, what do all these going downs seem to have in common? There's one thing that they seem to have in common. They're all being disrupted by blockchain. They're all being decentralized. So if you look at the ones that are going down, PayPal is being disrupted by things like Bitcoin and other payments mechanisms. Facebook is being disrupted by every other metaverse play. Netflix is being disrupted by decentralized gaming, and Netflix completely missed the decentralized gaming narrative. Spotify is being disrupted by things like Audius and other things. And maybe what the market is telling us is the market is saying to us, look, there's going to be two things in this world. One bunch of people are going to go up because they're not going to be disrupted by blockchain. And one is going to be disrupted by decentralization and something similar to decentralization. And you can see that there are a lot of companies that are exploring the metaverse right now, all these centralized companies that are trying to explore the metaverse right now. But they're not doing a very good job. And the market's basically saying, look, we don't think that you're going to crack it. We think that you were a great Web 2 narrative, but we don't think that you're going to get it. And I think Suzu says it very well. He says, I would add that there are crucial elements to crypto open metaverse that cannot be acquired by walled garden Web 2 incumbents at any price. It's like, no matter how much money you've got, you can try and buy whatever you want, but the decentralized metaverse is not for sale. We're not selling the decentralized metaverse. And the truth is that you can't build it the way that we think that the future is going to look in the metaverse. So if you look at like Facebook's iteration of the metaverse, like what the fuck is this?
Teleporting around.
This is not the metaverse.
It's going to be like clicking a link on the internet. Your home is your personal space.
This is not the metaverse.
You can teleport to anywhere you want.
No, dude. No, bro. In the metaverse, no one wears that shit.
Teleporting around the metaverse is going to be like.
Why would you look like that in the metaverse when you could be a punk or you could be a bored ape? That is not the metaverse, and that's what the market's telling Facebook. The market's saying to Facebook, listen, guys, you were great for Web 2, but for Web 3, you have no idea what's going on. This here is not the metaverse. And maybe because you think that this is the metaverse.
Clicking a link on the internet.
Because you think that this is the metaverse, that's why we're not going to reward you for the metaverse. You spent 18 billion and the best you can produce is that piece of shit video? Seriously? $18 billion? I mean, we should be grateful that Facebook is spending $18 billion because they are building a whole lot of tools. They're building the Oculus. They're building a whole lot of other stuff that's going to help us in the metaverse. But they are not going to build the metaverse. The same way that Walmart is not going to crack the metaverse. Because let me tell you that if I spent money on an Oculus headset and I went to the metaverse and shopping looked like this.
Great. Looks like you need a good wine pairing. Take a look to your right.
If this is shopping in the metaverse, I'm out. I'm going to commit NFT
Your
suicide.
age has already been pre-verified through your profile, so no need to wait for an ID check. Just place your ID in your cart whenever you're ready.
If I meet her in the metaverse, I'm slitting my wrists. If she's the best the metaverse can come up with, I mean, that is not the metaverse. And that's the thing. These big corporates don't get the metaverse. They just don't get what the metaverse needs to look like. They can have all the money in the world for now. They can be as big as they want, but they don't get the metaverse. The metaverse is about NFTs. The metaverse is about avatars. The metaverse is about a different way of shopping and a different way of interacting. It's not about beam me down, Scotty, like what Mark Zuckerberg did. That's garbage. That's bullshit. I'm not going to spend time in that metaverse. And that's exactly what it is. And what this shows is that maybe Web3 is not for these centralized entities. Maybe Web3 is not for Mark Zuckerberg. Web2 was for Mark Zuckerberg, but maybe Web3 is for decentralization and not for Mark Zuckerberg. You remember that the last time that Mark Zuckerberg tried to get into Web3 was when he announced Libra. Remember the big Libra stablecoin that was going to disrupt Bitcoin, some people said? Remember? That was the point in the world where Mark Zuckerberg announced that he is going to launch Libra. Where's Libra today? Well, I think like this month, they killed it. It's gone. There's no Libra. Because Web3 is not for the centralized entities. That's what this is showing you. And if you look at the growth of stablecoins since Mark announced that, that is the total amount of money that has been settled in stablecoins. I said to you yesterday, $6 trillion has been settled in stablecoins this year, last year. Where's Meta in all of this? Where's DM? Or what do they call it? DM Libra. That was what it was called. Libra. Web3 is not for centralized entities. Web3 is for decentralized entities. And decentralized entities are doing very, very, very well. Despite the price, decentralized entities are actually doing very well. Specifically, the decentralized entities that are dealing in the decentralized metaverse. Remember, I said to you, decentralized metaverse requires decentralized money. It requires decentralized file storage. It requires decentralized computing. It requires decentralized computing power, storage power, money. And the operators that are playing in Web3, decentralized, are doing very well. Like you look at Arweave. You know, Arweave did 1 million transactions in a day. 1 million transactions in one day. I mean, that is insane. And people don't talk about Arweave because it's not listed on Coinbase. Arweave quietly growing and doing 1 million transactions in one day. I don't know, you draw your own conclusions. Akash, developing. 92 updates to their tech in the last month. They're just going to keep developing. And then you take things like Render, Kyle Samani, who's going to render the metaverse, decentralized render power, now listed on Coinbase, renders on Coinbase. So when you look at what's happening in Web2 companies are crashing, and you're getting this K-shaped world where some are being disrupted by blockchain, and some are not yet being disrupted by blockchain. It would be hard for us to say that Google is being disrupted by blockchain. It would be super tough for us to say that Apple is being disrupted by blockchain or by anything decentralized. But if you look at things like PayPal, they're being disrupted by many decentralized vendors or protocols, whether it's Luna, whether it's Bitcoin. When you look at Facebook is being disrupted by the metaverse. When you look at Spotify, people want decentralized content. When you look at Netflix, people want decentralized content. And how did Netflix miss decentralized gaming? The world is being divided. And you know, maybe I'm finding a pattern here that's not yet real. But my thesis here is being supported by it. All of these companies that are down 20% are being decentralized. And I'm going to hazard a guess here that Amazon is not yet being decentralized by blockchain. And so I think Amazon will be one of the ones that goes into the upside of the K. Let's see that on today. Let's see that on today when they do that. Let's see. Maybe I'm right. Yeah, Render's on Coinbase. Render's going to Coinbase. There's a Coinbase listing coming up. Yeah, we missed that one. We should have known. We should fire the birdie. I mean, look at UST. Just look at UST. Look at UST. Look at the growth of Terra. This is while Mark Zuckerberg's stablecoin is dead, basically. Anyway, let's move on. Let's talk about the hack. We have to talk about the hack. Well, let's not talk about the hack. Let's actually frame it slightly differently. This is it. Mark says it right. This is when Winklevoss brothers flip Mark Zuckerberg. They get the ultimate revenge. They get the ultimate revenge when the decentralized world actually flips the centralized world. Anyway, let's get into the hack, but let's not talk about the hack. Let's talk about a prophecy that was made by someone who we all love, by the prophet Vitalik, because Vitalik actually made a prophecy. It was a real prophecy. You got to read this, and the prophecy was made in on January 7th, which was about a month ago, just under a month ago. And Vitalik says, my argument for why the future will be multi-chain, but it will not be cross-chain. There are fundamental limits to the security of bridges that hop multiple zones of sovereignty. So what he wrote in this Medium article, he said, to understand why bridges have limitations, we need to look at various combinations of blockchains and bridging and how they survive 51% attacks. Many people have the mentality that if a blockchain gets 51% attacked, everything breaks. So we need to put on all our forces to prevent a 51% attack. I really disagree with this style of thinking. In fact, blockchains maintain their guarantees even after 51% attack. And what he says is, if you've got 100 Ethereum on Ethereum, and Ethereum gets 51% attacked, okay, then some transactions will get censored, but ultimately you still have 100 Ethereum on Ethereum. Even the attacker cannot go and take your 100 Ethereum. Now he says, imagine you move 100 ETH onto a Solana bridge to get 100 wrapped ETH on Solana. And Ethereum gets 51% attack. The attacker deposited a bunch of their own ETH into Solana and then reverted that transaction on the Ethereum side as soon as the Solana side confirmed it. The Solana WETH contract is no longer fully backed. And perhaps your 100 Solana is actually worth 60, your 100 ETH is actually worth 60 ETH. Even if there's a perfect ZK snark, okay, let's not get into it. But what Vitalik said was, he said, look, bridges aren't really that safe, because if you live in a one-chain world and the one chain gets attacked with a 51% attack, then effectively you still have your assets on that chain. The problem is with a bridge is that a bridge suspends tokens in smart contracts. So if you've got 100 ETH and you want to bridge them to Solana, then how it works is the ETH live, the Ethereum, the 100 Ethereum live in a smart contract on Ethereum. They get locked up in a smart contract on Ethereum. And the Solana side of the transaction mints 100 new ETH. And the two contracts kind of communicate and say, look, as long as you've got 100 ETH bonded, I can mint 100 Solana. That's how a bridge works. And Vitalik's argument was that if that actually gets bridged or attacked, well, then the funds are no longer safe. And that's exactly what happened. Yesterday, there was a hack. On Wormhole. Wormhole is the Solana bridge. It was exploited for 120,000 wrapped ETH. And they said ETH will be added over the next hours to ensure that ETH is one-to-one backed. So they acknowledged that there was a hack, and they said, okay, well, don't worry, we're going to add ETH. We're going to add $300 million worth of Ethereum, because that is what the hacker got away with. The hacker got away with 80,000 Ethereum, which is, I think 100 or something like that. All right, okay, how did this happen? We're not going to go into the technicals. Someone says funds are not Seifu. Funds are 0x Sifu. Not Seifu, they're 0x Sifu. It's a long explanation, but how it actually happened was they attacked the bridge. They didn't attack Solana, they didn't attack Ethereum, they actually attacked the bridge. You want to go read the technicals, go and read it. The guy's name is at Kelvin Fitcher. He writes a very short article here. And he says he worked out how it actually happened it was an exploit of the bridge, and effectively they managed to trick the bridge into thinking that that the ETH could be withdrawn. And then the hacker withdrew 80,000 ETH for the Solana contract. So what did Wormhole do? They find out, they make this announcement. They say, okay, here it is. Here's the transactions. You can see the transactions. They're all here. The hacker cashed out 80,000 Ethereum. That's a lot of Ethereum. And they made an announcement. And it said, this Wormhole exploit is going to get messy. So why is this so messy? Because when the ETH got taken out of the bridge, it meant that the WETH or the wrapped ETH were no longer backed by Ethereum. Remember I said to you, when you're transferring ETH to Solana, you transfer your ETH to the smart contract on the side of the Ethereum, and it holds it there. It holds it there. And they mint what they call wrapped ETH on the Solana side. And when you want to redeem, you bring back your wrapped ETH to the Solana side, and then you remove it, and then you redeem your ETH. Problem is that if all of a sudden there are not equal amounts on each side, that means that a wrapped ETH actually doesn't equal an ETH. It means that your wrapped ETH actually aren't backed by Ethereum, which is very dangerous because it means that any trading asset against WETH on Solana is now worth nothing because it's not backed by Ethereum. That's the problem with this hack. Not only did the hacker get away with it, but it now means, what it means is that any ETH that is on Solana actually, for a while, became worth nothing because it wasn't backed by anything. Very, very, very scary stuff. If someone says bridges must become safer, you can't make bridges safer. That's a bridge. That's the problem of a bridge. Smart contracts are going to continue to get hacked. But what happened? What happened? They came back and said, the Wormhole says on Telegram, all funds are safe after a $320 million hack. They did appeal to the hacker to return the funds, and they said, look, if you return the funds, we'll make you into a white hat hacker. You can have $10 million. No one's quite sure what happened. What we do know is that Sam Bankman-Fried and Kanav from Jump Capital actually said that they would fund the $300 million. So they came out and said, we'll fund the $300 million. So you got two VCs who said that they would fund the $300 million. And Jose from Delphi says, building in crypto is hard. Cross-chain is even harder. Don't bet against a team willing to put up $300 million of their own money to make the users whole. Okay, now why did Sam Bankman-Fried and Kanav from Jump Capital, they jumped, as soon as this happened, Jump Capital jumped and said, we're going to pay $300 million because of an exploit. It's almost like they acted like a backstop or an insurance fund. And what Jose says is, he says, don't bet against the team that have so much money. And in a way, he's right. You can't bet against a blockchain where there are massive investors that are willing to stand backstop, because they will do what it takes. Whenever the chain suffers attacks and exploits, they will do what it takes to fix, to jump in and make users whole. So why did Jump Capital jump, and why did Sam Bankman-Fried does? That's the big story, because everyone's reported on the story, but no one's told you why Jump Capital jumped to fix or to make this whole, and no one told you why Sam Bankman-Fried did, and I'll tell you why. Start thinking. FTX has a lot of trading pairs against WETH, and imagine if all their users now couldn't trade against WETH. That's why Sam Bankman-Fried had to come to the challenge. And then you ask yourself, well, why did Kanav from Jump Capital come in? They didn't need to do that. It wasn't Solana that was hacked. It wasn't Ethereum that was hacked. It was the bridge that was hacked. So I did some digging, and I found out that the owners of Certus One are merged with Jump's trading team. And Certus One is the company that actually built the Wormhole bridge. So Certus One they were the guys, the developers of the Wormhole bridge. Berlin-based Certus One provides infrastructure for proof-of-stake blockchains. It was a core developer of Wormhole. See, that is why they jumped in. They said, look, this is probably our fault. This is probably our fault. And we made a mistake. And it was a mistake. If you go and read that thread that I showed you, you'll see that it was actually it was a very simple thing, that you could copy a signature from one contract to another to fool the bridge to think that it was a real transaction. That's what happened. That's what happened. That's what happened. And so now everything is good in the hood. It's not a Solana thing. It's not a Solana thing. It's a bridge thing. And when you are developing bridges, that's what's going to happen. And Vitalik told us that, bridges were not safe. He made the prophecy in about a month ago saying it's going to happen. And he kind of said, he even said it's going to happen on Solana. He said Solana WETH. That's exactly the contract that was actually exploited. Solana ETH. That's why he says, for this reason, it's safer to hold Ethereum native assets on Ethereum and Solana native assets on Solana. And in this context, he says, Ethereum refers not just to base chain, but also to L2. And that brings in the L2 narrative that we spoke about. So what Vitalik's saying is, what happened yesterday is actually good for Ethereum L2. And you ask yourself, well, how can it be good for Ethereum L2? Because L2 is also bridging tokens. You always bridge tokens from ETH to Matic. Well, not really, because what Vitalik says, he says, in this contract, Ethereum refers not just to base chain, but also to any L2 that is built on it. If Ethereum gets 51% attacked and reverts, Arbitrum, Optimism, and all the L2s will also hold that state. And they will also go back. And so there's no way that you can reverse Ethereum and not reverse Arbitrum or Optimism. And so this is good for layer 2. And we did say to you that we think that in the first quarter of this year, the layer 2 narrative is going to be good. ZK rollups, Matic, Polygon, etc. And I think if the market was a little bit more lively, then we would have seen that happen. So that's it. I mean, you see that last year was the year previous years were the years of exchange hacks. And this year, it's becoming the year of smart contract hacks. That's what it is. But it doesn't mean that you guys mustn't be vigilant about looking after your crypto. You should be really vigilant about looking after your crypto. Now, I said it to you guys yesterday, I think it was, that a friend of mine got hacked for about $2.3 million. And he was negligent. I mean, we now kind of know how the hack happened. He went onto a site where it looked like a MetaMask site, and it told him that there's an issue and he had to reload his MetaMask, and he put in his 12 words or his 24 words, and bang, he gave the hackers his words. It's a big lesson to us to keep our crypto safe out there. Never give your words to anyone. And if you are going to put your words in, check 100 times that you are putting them into the right site. I then reached out to our friends at NordVPN. And I said to the guys at NordVPN, I said, look, guys, tell me why you need a VPN in crypto. Why do you need a VPN in crypto? And they actually gave me some really cool points. And I think that VPNs, I've been saying it to you guys for a while, that VPNs are a super important part of the crypto toolkit. You cannot be in crypto and be using your normal internet to be trading and stuff like that. And there's many reasons why that's the case. And I'll tell you why that's the case. The first thing is, what does a VPN do? A VPN hides where you are. It hides your unique number that your computer transmits, which shows where your computer is or who your computer is. Okay, so a VPN, what it does is it kind of fools the site to say, hey, you think Run is in South Africa, but actually no, Run is actually in the USA, or Run is actually in Hong Kong. It hides the IP address, basically. So no one can see what your real IP address, and no one knows where you actually are, which of course makes it much easier for hackers. If hackers know where you are and they know your IP address, they can hack into your computer. But the thing is, if they don't know your IP address, they don't know where to hack in it. And companies like NordVPN, so companies like NordVPN, and there are many VPNs, there's ExpressVPN, and et cetera. Companies like NordVPN protect you because hackers don't actually know where you are. And that's not the only thing. The other thing is, if you think about your internet service provider, your internet service provider knows exactly which sites you're going to. They know exactly which sites you're going to. They know your computer and they know exactly which sites you're going to. So your internet service provider knows how much time you're spending on Binance, how much time you're spending on Uniswap. And that information is super, super, super valuable, especially if people want to know where you're at. And exchanges and the authorities want to know how much time you're spending on Uniswap or Binance. Well, they can do that. So you have to start protecting who you are in crypto to not get hacked, but much more importantly, to conceal who you are. The third reason is you may be traveling to different places in the world. Like, to be honest, when I traveled to the US, I always put my VPN somewhere else so I can keep trading using my FTXs and using my Binances and everything else because I don't want them to know that I'm in the USA. And so that's why I use a VPN. Now, what is the cost of a VPN? And I'm not trying to show you a VPN, although we do have an unbelievable deal. If you go to there's a referral link below, you pay $3.56 a month on a 2-year plan. If you go on a 1-year plan, you pay $4.92 a month. Now, I don't know about you guys. But to pay $3 a month or to pay $4 a month to protect my identity from the authorities, from the exchanges. I don't want the exchanges to know where I live. I don't want the exchanges to know where I'm traveling. Every single transaction that you make on an exchange, whether it is a centralized exchange or a decentralized exchange, notes your IP address. Okay, it notes your IP address. NordVPN does that. NordVPN also has products that protect you from phishing. So VPNs don't really protect you from phishing, but NordVPN has products that protect you from phishing. So I'm saying this to you guys again. We saw this in the Solana hack. We saw this yesterday with my friend that got hacked for over $2 million. He could have probably prevented the whole thing by paying $3.56 a month. Now, I don't know how much your crypto portfolio is worth. What I can say to you is that at $3.56 a month, I'm willing to take my chances. I'm willing to jump onto VPNs and trade on, and every time that I trade, jump onto the VPN and jump in and trade from a different jurisdiction so that no one can track where the hell I am and so the hackers never know where the hell I am. And when you're on public Wi-Fi, which sometimes I'm forced to use, even more reason to use a VPN. You cannot reveal the IP address of your computer. You're opening yourself up to hackers. You're absolutely opening yourself up to hackers. So look, do what you want to do. I've got a VPN every time I use my own computer, not the computer here at the studio. I'm always on a VPN. Every time I'm trading, I'm always on a VPN because I don't want anybody to know where I am, whether it's the authorities, whether it's hackers. I just don't want people to know where I am. I want to be safe. And for $3 a month, I'm going to stay safe. You do what you want to do. If you want, there's a referral link below. You do support the show when you do it. Everything we do is free. So maybe just support the show and just take out a VPN contract. I'll see you guys again tomorrow. Hopefully the markets will be better and there'll be a lot more to talk about. Also, I think what we should do tomorrow, we should do a call-in show. We'll do a nice call-in show. People can talk. Another call-in show. You guys can call in, share your portfolios. That's good. Yeah, you could be the first guy to call in so we can fix your portfolio.
I'm down bad.
Fred, I want to know something. Donny Big Bags' new project. When are you going to bring us Donny Big Bags' new project?
So there's a big surprise coming up for the community tomorrow. I didn't want to speak about it today. There's a little bit more info coming in, but all I'm saying is that we have a huge surprise for the community tomorrow. So I suggest either you hang around on the Crypto Banter website, or you make sure you watch both shows tomorrow, or you're going to be missing out big time.
All right, and I see that Miles Deutscher, who's joining us on Monday, has an article that is 1.9% crypto gains right now. He's written an article showing you how you can make 1,900% on your crypto right now. And I mean, that is why we introduced the DeFi show, because when the market's moving sideways like this, the best way to make money in crypto is to DeFi, is to stake your coins. I staked my Coty, by the way, today. I'm getting something like 53% yields on my Coty in the Coty treasury. Free money while I wait for the market to recover, 56% a year. I don't know, money for jam, sounds like it. All right, guys, I'll see you guys again tomorrow. Until then, I won't say trade well, but you're not trading. See you tomorrow. That NordVPN for $3 a month. I mean, who doesn't pay $3 a month? Yeah, for $3, it's not like, okay, you tell me it's going to cost like $100 a month. I said, okay, it's a lot of money.